in essence, we have decided that there are a number of institutions in our country that are too large to fail. We are going to stress test them, and really, to me, it's not so much about capital, it's our ability to calculate risk in the past, and I think we're going to look at that risk in a much different way. And then simultaneous to that, as an entity, a government entity, we're going to be providing capital to these institutions on a go-forward basis. And so the signal to us and to the markets, and I'm just clarifying, is that there are institutions in this country that absolutely will not fail, and we will go to whatever lengths necessary with public sector dollars to ensure that that doesn't occur.
Well, we're committed to ensuring the viability of all the major financial institutions. Fortunately, it doesn't come up in the sense that none of the major institutions are subject at this point to any kind of fiducia or prompt corrective action rules. So,
but they will be when these stress tests take place.
No, I don't think so. What the purpose, again, is to figure out, remember, we're looking at that not just at the main line scenario, we're asking how much additional capital would be needed if you get this worst case, the stressed case. And it's important to add, Mr. Chairman, if I could have just a moment.
Yeah, please.
That the way the capital will be provided will be in the form of a convertible preferred stock. So there's capital available to the bank, but it doesn't have an ownership implication until such time as those losses which are forecast in the bad scenario actually occur. At that time, then the bank could convert the preferred to common to make sure it has sufficient common equity, and only at that time, going forward, if those losses do occur, would the ownership implications become relevant.
I think people understand about the condition that Senator Shelby mentioned about too big to fail, but when you stated earlier, we are committed to ensuring the viability of all major U.S. financial institutions. That's a statement that I guess I've never heard said that clearly before. And I think that some of us have expected that there's at least a possibility if a financial institution is not performing properly, they might be seized, which is certainly a form of nationalization for a period of time, but it's different. It's under different circumstances. But what I hear you saying today, again, I'm not being critical, I might be later, but I'm just observing right now, is that we're going to get them to sort of take their medicine. We're going to go in and make them reserve up for these accrual loans that we know is where the next huge hole is, but we're going to give them public dollars. I mean, that to me, and I certainly haven't been around that long here, but that to me is nationalization. I mean, I'd like for you to give me a term to use as I leave here as to what we would call that.
Call it a public-private partnership. It's not nationalization because the banks will not be wholly owned or probably not even majority owned by the government. The government will be a shareholder along with the private shareholders.
But you're putting in a mechanism to where our common equity holdings will be large by virtue of creating this convertible preferred situation, and you know that the losses are coming because you're going to do this stress test. I mean, that's why you're putting this vehicle in place. And I do wonder how we ever get to the end game where, in essence, there are, in fact, people willing to buy common shares. I mean, I can't imagine in these 19 or 20 institutions anybody, after hearing this statement today, which maybe you've said it before and I hadn't heard it, but why would anybody go buy common shares in banks today in those 19 or 20? Why would anybody do it?
Well, they wouldn't today, but I think eventually they will as all the elements of the program work together to take off bad assets, to recapitalize them, to get them restructured. I think, part of this is that, remember, we do have a legal procedure. We do have the fiducia laws and the prompt corrective action. If a bank does become insolvent, then we have the FDIC will of course, intervene. But we're not close to that. All the banks are above their regulatory.
Well, they're only there because we're continuing. I mean, the statement has been made that we're going to keep putting public dollars in to keep that occurring. So they're never going to get to a point, these 19 or 20 banks never will get to a point where the seizure occurs, because you're putting in place a mechanism to keep that from happening. And I'm just saying that's a really bold statement and something that I guess I haven't deciphered until today. The statement was made earlier that the Federal Reserve does not have the authority to close down a large institution. I think the chairman may have been referring to AIG. I'm not sure. But I'm wondering if it would be good for him to clarify, and then since this committee, I guess, would have something to do with that, if there's something that he's asking for. I'll wait until if there's something he's asking for, because what I'd hate to happen is 2 years from now, we end up in a situation, if it's AIG, he might have been talking about Citigroup. I don't know who he's talking about. I'd love the clarification, but I'd hate for us to wake up 2 years from now and say, and the Fed be saying, well, we would have done it, but we didn't have the authority to do it. And I'm just wondering if he might clarify, since that's an important.
Senator, thank you. I've talked about this on a number of occasions. I think what's missing is a comprehensive resolution authority, a set of rules and guidelines which explains how the government in general would address the potential failure of a systemically critical firm like AIG, for example.
So it could be Citigroup. Or could be any firm.
Right. The existing rules don't cover a Citigroup, because that's a bank holding company with lots of different components. So we don't have a good framework for dealing with systemically critical firms. The Fed, we're working on some proposals. We'll be happy to share them with you at some point. But I do think that that's the first step. Until it's safe to close down a big firm, you can't. You're going to be forced to take actions to avoid it. And as I said, I'd be very happy to get rid of the 5% of my balance sheet which is tied up in these kinds of extraordinary rescue efforts. So it is critical that we have a good resolution regime, and we are working hard on it. We'd be happy to share with you, Senator Corker.
So you're not asking, you're not going to come back in a year and say, well, we would have closed down X or AIG, but we don't have that authority. We're working towards that.
I'm hoping this will be part of the broad reform package that's going